Welcome to TradeTheNBI.com. This is John. This report is for the 23rd, and well, the averted government shutdown was an impetus to continue to drive things forward. We had seen the reset here on the shakeout, and it was still looking positive because we still didn't have a situation where the cyan was breaking above the red DOC, long-term buyers and mid-term buyers, to give any justification for short. Plus, we had the full reset of the short-term buyers, and that started moving up, and sure enough, as the agreement came through, we propelled it. So it's still looking strong, but you finally have a little bit more of an increase in short activity. However, it's got to take out this previous peak here to show that there's a significant number, and that's 409. So it's right now 260, not quite there yet. So it still looks fairly decent as long as you keep resetting those buyers and there's availability. Now, that doesn't mean by the end of the month we're not going to have a little bit of a change, but still, it's just pointing to the strength of the tax cuts and the expectation going forward. Now, some of this also is factoring in potential inflationary pressures, and this is something I talked about a while ago, that the market pre-prices that in, and the expectation of growth and inflation that goes with it is a factor for increasing these things. So NASDAQ, again, following that shakeout turn from resetting back to the positive, and NASDAQ, though, has been completely in the overbought category as far as positive extremes. But what that's really indicating is that the algos kicked in right here, and it's just taken it straight through. And the fact that the cyan has been below red on the NASDAQ, pretty clean. We had a couple of points where you could see the shakeout dip right as we got to the orange going above, but all it did produce was just a static situation because you had the reset of the short-term buyers and no DOC spread taking place. So again, markets pretty much in line. The euro is stabilized right here after the whole China setup. It's outside the range that it can really support itself at, but that's not stopping buyers from coming into it, and it just fuels economic growth in America because it makes exports cheaper. So that's only helping manufacturing in the U.S. Here you have Treasuries, and again, these are going to continue to be weak. People are calling it super oversold, blah, 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 but the reality is, I love that term because oversold only makes sense if you see new buyers. And do we see new buyers coming into the setup? Not at this particular point. So it's like overbought. It's not overbought until people stop buying. So kind of a ridiculous thing, and it's something I've always objected to, which is why I began to write the algorithms that we see visualized here, so that you can understand that while it is in what some people consider an overbought state, it can remain so as long as there's no pressure driving it the other direction. Oil, likewise, again, a little spider development there, which with the full reset. So oil can continue to make a climb. And if it breaks out a little bit more, I think then you have a clear idea that inflation is definitely going to have to start being priced in 6 months down the road or so. And that's already, we've seen taking place in gold. And again, I talked about this. The rise in gold was going to be the inverse play to the cryptocurrencies. I think Bitcoin futures, you would expect them to be falling under that kind of category. And, sure enough, we reached our peaks. We got a ton of short signals there. And as the lows stayed flat, highs came down. That called for a move back to the highs. But again, we had the DOC spreads starting way back in the previous day. The problem is that, again, this is where I don't particularly care for minute charts, but the liquidity on it has been too thin to move to complete ticks because there wasn't enough data. But we're getting close to that point where I can flip those over, and it will give us an even more accurate view of it. Not that it hasn't been pretty darn good, because every time we get the resets, you had no closes above the 23% line until we got over here, where we finally produced a solid move, and we were actually above the negative 13.5 on the shakeout, and got to the 50%, and actually with the falling high there, moved towards the high, hit it, and right after that point, you had a strong DOC spread took place right about there, and sure enough, it started to break down again. But it's just an indication that it's getting more into the control of bigger players in that sense, that the futures do have an impact, and certainly a nice counter trade, though. No objection to it. And then when we look at the 5K, cyan below red, we had a couple of points where started to break above it, but wasn't even enough to break it below the green ABM. In fact, that's really all that we got from it. Then the cyan moved back below red again, and we started a whole nother up cycle. So you can see the waves as it goes, and the signals as they pop up have been, starting off with resets of the steel coming from below 13.5. We didn't get any oversold within these setups, even though we got a complete shakeout reset. Immediately turned back to the positive side and then continued another run. You just can't beat the strength of that. And it's something I talked to you about end of last year when people were chasing return. And likewise, again, this is a situation where some people are playing a little bit of catch-up for the first quarter, and that will help improve things for them. But I think you'll probably see some of them start locking in some of the gains, particularly the ones that have been significant. In this particular case, this push towards 3,000 is definitely underway. It's a little too far too fast. Markets can get overpowered that way. Becomes a frenzy, and then it just takes a catalyst to drive it the opposite direction. But the fact that the shutdown was averted now for a few weeks, it moves it to February. So we'll see what happens there. Though, with the economy hitting on all cylinders, people are less interested in what the government is doing. It's not having as dramatic an impact because the tax cuts certainly override that in a big way, because it's always been said that you leave government out and let business do its thing, and you're going to have growth, and that's exactly what you're starting to see. So, as always, though, I will post relevant charts as needed. Trade well.